This is Fintech Cappuccino, your Saturday morning podcast with a pinch of espresso on the why and how of fintech. The show is hosted by Brian van Wachem, CEO of RedSnap, and I'm Connie Dorrestein, founding partner of Bankify. Hi, Brian.
Hi, Con. How are things? I thought we should do something on the investment climate. Such unusual times post-COVID, in a war, it's sort of, where's the money thing?
Yeah, I actually agree. I just read another major TechCrunch update today, and there's certainly some change in here. And mostly, I think, in all fairness, hot air disappearing, which is not necessarily a bad thing. But also, becoming more transparent for all in this whole stage. Shall I reach out to Tim Levene, the CEO and lead partner at Augmentum in the UK? They have quite a different story because they're a public fund. They treat it all slightly differently.
All right, okay, well, that's a good shot. And we can also move into pros and cons of what and how it feels to be in Britain and want to be in Europe.
Oh, you nasty one. Okay, well, Brian, let me call him and circle back to you. And but let's talk money. Yeah.
All right, speak to you soon. Bye-bye.
Soon. Bye, dear. Tim, good morning.
Good morning.
Why did you choose this particular music? It's got a lovely beat.
Well, it's definitely an unusual one. And I think all of us who work pretty hard sometimes need to detach from reality. And I think if you can listen to that song and imagine yourself on a beach in Ibiza, sun going down, sipping a nice cocktail, then I think it's the perfect way to unwind and detach yourself from what we all have, which is often a busy life, and we all aspire to have a little bit more downtime.
Good. Right. Well, thankfully the sun is shining again, Tim, so you're leading us nicely in.
Yes. So looking back on this week, Tim, what news caught your eye in particular?
Yeah, well, I think we've had a lot of quite depressing news in recent weeks. I think stepping out of of some of that, I think there's some really uplifting things going on, in particular the Invictus Games at the moment, which some of you may be aware of, where you have wounded veterans competing. Interestingly, I've got a kind of long history with both Prince William and Prince Harry. Many years ago, I helped set up their Royal Foundation here in the UK. And it was very much about what should the next generation of royals engage in from a charitable point of view, and really finding their passion areas. And clearly, the military and wounded veterans was one huge passion area of Prince Harry. And the Invictus Games has gone from strength to strength, and it's fantastic to see it in different cities and countries. And it's had some, great coverage this week, and I've really enjoyed kind of watching and listening to some of the inspiring stories that have come out of that.
Yeah. Cool. Yeah. We could have a separate podcast on that one, but that's
and it's the bridge between London and Amsterdam because it's taking place in Amsterdam this year. So yeah,
absolutely, yeah. I think that's great, and it's one of those opportunities early on. We didn't quite know how big it was going to be, and it's really taken on a life of its own, which is ultimately what you want it to do. And it's become self-sufficient, and I think it's inspiring, a lot of people to do great things.
Yeah. And standing up in tough times and sort of not giving in and keep going, courageous. It's a good message and lesson for us at this particular moment in time.
Absolutely.
Thanks, Tim.
Tim Levene started his professional career at Bain & Company, where he worked in Moscow and Sydney before returning to the UK to start up juice bar brand Crush. He lived the startup life as a founding employee of Flutter.com, which later merged into Betfair. In 2009, he founded Augmentum Capital, a dedicated fintech investor which holds positions in companies like Tide, Awoka, Cushion, and many, many more. Augmentum is the only listed fintech-focused venture capital firm in the UK, launched on the LSE in 2018. Augmentum, and Perk Your Ears listener, offers patient capital and support to early and later stage growing fintech businesses around banking, insurance, asset management, but really the wider financial services arena across Europe. With a commitment to both the World Economic Youth Forum global leaders and Innovate Finance, Tim is well known for earning and returning in fintech. For the sake of full transparency, I am a non-executive director at Augmentum Fintech plc.
Tim, welcome again. An investment trust as the vehicle for VC activities is quite unique. Could you introduce your fund and explain the rationale behind the strategic choice, please?
Absolutely, Brian, and thank you to you and Connie for inviting me on the podcast. I think if you think about venture capital and backing the next generation of great ideas and entrepreneurs, when you look at the structure of venture capital itself over the last 40 years, for an industry that champions innovation, it hasn't really innovated itself very much. And being a very long-term entrepreneur and having been backed by VC in Internet 1.0. When we launched Augmentum Fintech plc, almost 4 years to the day, we listed it on the London Stock Exchange. It's a closed-ended permanent capital vehicle. So, in effect, shareholders will apply for equity at the prevailing net asset value, and we will use that capital to deploy, across a number of fintech companies with no specific end life. I think if you think about traditional GPLP funds, they typically have a 10-year life. There's an investment period of 3 to 4 years, and then you spend the next 5 to 6 years working those companies and ultimately exiting them. This just gives us the opportunity to, one, be patient when we need to be patient, but also to be able to grow the vehicle to real scale and have a significant amount of permanent capital and not be in that perennial cycle of fundraising. And I think we're all looking for differentiation in this market in the current days, where capital is much more of a commodity. And I think for us, being a specialist in both fintech, but also having a somewhat unique structure that gives that permanent capital and that ability to be patient, does allow you to be somewhat differentiated in a quite noisy market.
Yeah, well, that's quite okay. And also, Sequoia is also getting in there. So you're probably ahead of the pack. But can you give us some pros and cons of being public?
Yes, look, I think for us if you think about the pros of this, I've already highlighted some of them. Permanent capital is important. I think entrepreneurs, as we know, don't always work to a defined timeline. They don't always align specifically with traditional fund structures. And ultimately, if a company is performing well and has the ability and desire to remain private for longer, then why have a misalignment with your investors who are looking for exit so they can raise their next fund? So I think it certainly kind of allows you to be, in my view, more aligned with your underlying portfolio companies. I think, the flip side is, of course, being public, there is nowhere to hide. We are, managing private assets. And of course, once you raise a traditional private fund, you raise the capital and off you go and deliver it. And at the point in which you return the money or not, you will be determined whether you're successful or not. We have to report to the market twice a year. We report our aggregated net asset value. And as we know, in venture, performance doesn't happen overnight. And so you would, in an ideal world, I'd like to say to our investors, give me 5 years, let me go away and come back and let you know how we're doing. But you don't have the luxury of that. So there is always that measure and visibility of performance. But ultimately, you learn to adapt and, keeps you on your toes.
Yeah. So being public, does it change your portfolio selection as well?
Not really. I think from our perspective, we're very focused on what we would define as kind of Series A and B pan-European fintech companies. I think what we have, though, is the opportunity to be flexible, to be opportunistic. We don't have to just be focused on those two particular stages, because when you have this permanent capital vehicle, you can be driven by your internal rate of return rather than a multiple of money. So if we see a very compelling proposition where, a large growth investor recognizes that we can bring something to the table, we have domain expertise, but the exit path might be 18, 24 months. A typical venture fund focused on Series A and B would sit there saying that doesn't fit our mandate. But if that's going to deliver a compelling return to our investors, then we can do that and recycle that money. So it allows us to be opportunistic. And I think, that's one of the attractions and one of the motivations that I had in launching this listed vehicle back in 2018.
Okay, Tim, moving on to the theme of our podcast, where's the money? End of year, we talk a lot, we look back, we look forward. But between the end of the year and now, a lot have changed as well. We live in sort of slightly weird and unsettling times. I mean, I think we all got used to complexity and uncertainty, but now, we got out of COVID, we thought, hey, this is it. Then the war fell upon us, sanctions. What does all of this, in your opinion, mean to investing, but probably even first to the fintech scene?
Well, we've had an incredible couple of years, 2020, 2021, in terms of not just venture capital, but fintech itself. There is more money that has flowed into this market than ever before. And I think there's a real recognition that this is an asset class that is real, it's substantive, and it's starting to create some real kind of breakout winners. I think the reality for 2022 is we're not going to see a year like we had in 2021. There's no question that the market overheated from a valuation point of view. And I think as a long-term specialist investor, that's not necessarily a bad thing. If I'm perfectly frank with you, we see in bubbles, in bull markets, tourist money come into the sector, investors looking for exposure at any cost. And that's not particularly a healthy thing for the market. So I think in the long term, we've got an exciting future ahead. There is a long way to go in terms of disruption to come in financial services. But I think we're going to see a moderation in valuations, in particular at the later stage. But we have more investors, more capital than ever before, both in venture and fintech. And I think for a sector that still is in single digits in terms of penetration in the overall market, that is much needed because we were undercapitalized as an industry.
Now, here's a personal observation. You may put me in my place, but I've always had this thing. And this morning, I got slightly served by the news on the radio. I mean, Netflix had slightly falling user numbers, takeaway and food delivery, etc., slightly starting to struggle. My thesis has always been that consumers are terribly fickle, and particularly when stuff is nearly for free. And so I've always had more confidence in the fintech scene, in the B2B space than in the B2C space. Do you see that? Do you see a difference in when you look forward to an interest in B2B as well? I think initially as well, investors found it sort of harder to get their head around because you really need to understand the scene. How do you view this, Tim?
Yeah, I mean, I think it's a good question. I mean, personally, I'm a B2C guy. I kind of obviously have a long pedigree in that space. But when I think about our broader team, there is definitely increasing bias towards B2B. There's no question about that. And I think, again, we're seeing, a lot of kind of breakthrough players in that space. I think if you look historically at businesses that exit, you have a higher proportion of quality B2B businesses that exit at consistent multiples. And I think when you think about bubbles and when you think about bull markets, it's often those B2C businesses that achieve those unrealistic multiples that can't be sustained. Some of them are absolutely extraordinary businesses. I mean, Netflix, a fantastic business. The question is, what is its true value and what's the right multiple for it to trade on its next 12 months earnings? So I think we see some fantastic businesses in the B2C space. I think the financial services incumbents historically have done a pretty lousy job offering consumers great propositions, both from a digital perspective and with price transparency. And so I think there are a lot of fantastic B2C fintech propositions that consumers have embraced and adopted. Ultimately, the beauty is in the eye of the beholder. What's the right price for that and how much do I believe in its future growth? And I think
So what is a good example of a B2C and a B2B that you sort of and Augmentum believed in, and how are they faring?
Well, often in the world of venture, it depends which day of the week that you ask your your portfolio manager exactly. I think if I think about some of our B2B investments, one business which, I think has been hugely successful and continues to thrive has been a business called Onfido, which is KYC, AML, facial recognition. It has become really the platform of choice to onboard customers for both fintechs, but also traditional financial services, whether it's the likes of Revolut, Monzo, Tide, Robinhood, Coinbase. They've all chosen to work with the likes of Onfido, but increasingly you're now seeing the traditional financial services incumbents embrace and engage with the likes of Onfido as well. And, I think when you see that crossover in terms of the traditional financial services players feeling much less nervous, much less reticent about partnering with these B2B fintechs, who frankly are there to help them remain competitive, against some of these B2C players in the fintech space. And I often say our job as an investor is to back some of these B2B players, helping the incumbents stay competitive, as well as back some of these B2C players Absolutely. Who are trying to disrupt the traditional space.
So I have to come clean here, Tim. I'm always a little bit wary of men and women who direct a company on the basis of spreadsheets, right? From a distance. So entrepreneurs feel a different pressure, and they are with their feet in the mud, juggling with their clients, their product roadmaps, scarcity of talent, and empty pipelines. So to what extent do you feel the same pressure?
I mean, I've been an entrepreneur since the mid-90s, Brian. So I think I can really empathize, and a lot of the experiences that, founders experience really resonates with us. And again, I think that was lacking in VC 10, 15 years ago, where you didn't have enough entrepreneurial DNA in the sector. I think that's changing now as generations come out of entrepreneurship and feel that they can bring something to the investment space as well. So I think we've got a much better generation here in Europe of VCs that complement what we had before with that real entrepreneurial DNA. And I think you and I will know very well, it's very hard to manage venture businesses on spreadsheets. A lot of them don't have much of a track record to be able to kind of fill out those cells. So, ultimately, you've got to be able to empathize. You've got to be able to adapt and react. There are some very common challenges that founders, entrepreneurs have in the space, irrespective of the sector that they're focusing on. And I think our job is to, be able to step in and help as and when those challenges appear.
So if you step in, right? I mean, if at all, I don't know to what extent you're hands-on, but so on what signals do you as an investor decide to take action or step in or intervene? Or can you give us some examples on that one?
Yeah, I mean, I would say a really good investor, board member, and we do tend to play an active role in our businesses as board observers or board directors, is to be preemptive. It's not to wait until the crisis happens. I think the benefits of grey hair and having multiple portfolio, you see kind of common challenges and problems, and you can see the trends. And ultimately, our job is to step in, and whether that is helping them hire when there are some real scale-up challenges, seeing the gaps of what's coming 12, 18 months ahead. Fundraising is one area where investors can add huge value. We do this every day. We see thousands of investor pitches over the years. And if you're an entrepreneur, you don't see that. And you know the right type of investors, the right type of storytelling, and you can really work with the companies to help them maximize and optimize for that as well. And just connections, again, comes back with the benefits of being in the market a long time. You know a lot of people. And if you're a first-time entrepreneur, you don't have the same network. And ultimately, it is about connecting. And I think if you can really help connect both to future staff members, whether it's to mentors, whether it's to board members, whether it's to other investors, you can really add some practical value well ahead of the curve.
And what do you reckon is the most challenging stage of a company? Is it the startup, the scale up? Is it sort of, I've been there a few times, and I've personally found, for instance, that after 150 staff, you become a real serious business. But that was my personality. Then it becomes really difficult because you've got to embed processes and become more formal, etc. But you see so many companies. What do you think is the most challenging stage for a founder, entrepreneur?
Yeah, I would tend to agree with you, Connie. I think the Series B plus is where it requires a very different skill set, and it's very challenging for founders to make that leap. I can, go back to my own experience at Betfair, where we were a bunch of 20-somethings that grew from 40 to 400 to 1,400. And frankly, we were clueless, and rightly so, they brought some grown-ups in to help manage the business. So, I think the seed and Series A is very much about inspiring. It's about narrative. It's about storytelling. It's about inspiring your team and building something out. The transition from Series B to Series C is putting some real meat on the bone. And ultimately, when you go to raise that growth round, the storytelling, frankly, the business should tell the story itself rather than you. And, that is when you're managing 300-400 people, it requires a really different skill set. I'm pretty hopeless at that. I love building businesses. And if I was in that position again, post Series B, I would absolutely look to bring in a professional scale-up CEO. But at the same time, there are many, founders that want to take on that challenge, and some thrive. But
can't step over their own ambition and ego.
Absolutely.
Very often self-delusion, not enough self-criticism.
Yeah, and I think your job as an investor is to work with that founder and help him or her adapt, or identify some of those shortcomings and fill in some of those gaps as well. It comes back to, Brian, your question before: what can you do as an experienced investor? You can see where the gaps are in the founding team, and you can really help fill them, because we want our founding teams to succeed. And at day one, you can't always change out the team. You're backing a team.
No.
You're not bringing in your own management team. You're absolutely backing them to succeed.
I think that's one of the hard things about hard things, right?
It's showing. Sure. Tim, coming back, Augmentum is London Stock Exchange listed, but you obviously have very much an international ambition. You're looking at Europe. Obviously, London and America are seen as the hubs in the world. Europe, particularly when it comes to capital. Europe has a few hubs. Amsterdam likes to think they're part of it. But how do you view the evolving sort of European ecosystem and its place on the global stage? Do you see it as a real opportunity or a me too?
I'm hugely bullish about European fintech.
Great.
I think over the last 10 years, we've seen a dramatic evolution. We've seen increasing depth of talent in major, European ecosystems. And what breeds that is success. So when you have an outlier success story in Amsterdam, in an Adyen, or a Klarna in Stockholm, or a TransferWise in Tallinn, that money that is realized flows through, both through employees, both through early investors, and it creates these mini ecosystems. And I think we've seen that in London. And despite the fact that we're no longer in the EU, we're still very much part of Europe.
We think so.
Yeah, we hope so too. And I think it's cross-pollinating. So I think we've got some great centers where you've got some real depth now in Europe. And I would point to Paris, Berlin, Amsterdam, Stockholm, Tallinn, all centers where you can sit there and find a handful of outlier fintech success stories that are breeding the next generation of fintech businesses. And so for us as an investor, increasingly we're spending much more time across the continent. And I think as I said, there is a much broader breadth of talent, and that's great, for European fintech. And I think it will continue for the coming years.
Yeah. Hey, and no fintech podcast, of course, without mentioning the C word, crypto. So now this is obviously a quite new area for bigger investors. May I ask you, what's your personal take on crypto or Web 3.0 or the metaverse or all of the above? I mean, do you have a vision on it, and what is it?
I've always been intrigued by it. I've been a holder of crypto for over a decade. I think the question as an investor for a publicly listed vehicle is, what is the right approach? And I think with any emerging technology, there are compelling use cases, and there are a number that won't survive the test of time. So personally, I'm a believer. But the question is, for us, we've taken a view as a fund to invest in the infrastructure, in the picks and shovels. We believe that a regulated environment is the only way forward. We are backing businesses that have a long-term view, whether it's working with the likes of Gemini in the US, or Tesseract in Finland, or Parify, who are one of the leading DeFi funds globally. We're really looking to work with kind of best in class. And ultimately, I think over the next 2 to 3 years, you will see how the industry kind of really evolves. And I think we're seeing it in 2022 in particular, where regulators across Europe are engaging in a way that they haven't before. They can no longer ignore it. It doesn't mean that crypto is here to stay forever, and I think we can all be skeptical about certain aspects, whether it's the NFT market, elements of the NFT market. But fundamentally, there are some compelling use cases for a lot of these technologies. And our job is to pick those businesses that are going to be here for the long term, that really understand the underlying proposition and aren't swept away by the hype. And I think if we can do that as a fund, then I think we can give our investors some good diversified exposure in the space without doing anything too exotic.
Then fintech. Tim, I'd like to sort of take a look back as well. I love all the forward-looking statements, and that's obviously what you're most worried about as an investor. But I want to go slightly philosophical here and say, after 10 years plus in fintech, 5 very elated years, do you believe, we touched on it briefly, do you believe fintech lives up to its promise of giving more people and businesses access to the real economy, making things fairer and more transparent? I think those were the real promises, and creating more competition. What is your take on this?
Absolutely. I think there is still a long way to go. As I said earlier, we're early in the journey. I think some markets are further ahead. But I think what we've certainly seen during the pandemic is that huge accelerated digital adoption. And I think, consumers have really embraced some of the propositions out there across kind of Europe and the US and beyond. And I think we can start to see in some of these emerging markets as well. You only need to look to Africa and see some of the fintech propositions there that have really kind of taken hold. And that really has, I think you can, even if you're looking at lending, or you're looking at the likes of Flutterwave, Africa isn't our area of expertise, but it's hard not to look at admiration at the likes of M-Pesa in Kenya in terms of kind of money transfer as well. These are really kind of offering kind of low cost, accessible propositions. And Connie, if you look at the financial incumbents today and you listen to the rhetoric, you only need to listen to Jamie Dimon and how his language has changed over the past couple of years. I think in his previous, message to shareholders, he opened up saying we should all be scared shitless of fintech. And, ultimately it has changed, and they have to up their game as well. And so they have to offer better propositions at lower costs with greater transparency. So I think we have started to fulfill a lot of the promise. I think there's just a lot more to do over the next 4 or 5 years. Yeah, exactly. And I think it's a little bit the same as sort of being vegetarian or not, where it's the young generation are all vegetarians now. And I always say to them, you can be zealots about it and preach that everybody should be a full-time vegetarian. But if the whole world goes to being a flexitarian and only eats meat twice a week, we get a much greater impact. And that's probably the same I see in this whole fintech thing, where first people were just hopping up and down and saying, neobanks will kill them all. The numbers obviously show that is not the case. But the great thing is that trend
has made the incumbents aware of changes coming, and it's coming faster than we thought. So I think ultimately, for me, that is a huge new market for fintech, is to lay siege on this new sense of humility that the incumbents have, like, yes, we probably can't do it without you. So
I think that's right. And I think certain industries take longer to disrupt than others. And I think regulation has been a great inhibitor of innovation in financial services. But, I just go back to my experience in the betting industry 20 years ago, where in the UK, we had 3 companies that had 90% market share. And within a handful of years, Betfair was bigger than all 3 of them put together, because they refused to embrace innovation. They wanted to maintain their margins. They were dismissive of the innovator. And I think the financial services industry has been somewhat guilty of that, but they can no longer be that way. And I think if they don't digitally transform, then they won't survive the next 5 years. And I think there are very few now that recognize that. The big challenge for them is, can they? Are they too big, too slow? Have they left it too late? And that's the big question out there, where there will be some big winners from the incumbents, but also some big losers over the coming years.
And then one final one from me before I hand you over to Brian to sort of close things off. ESG and finance. And again, sometimes I'm very skeptical, because suddenly everybody is measuring carbon footprints and being green. And at the same time, they're still giving out huge loans to farmers. So anyway, where do you see good in ESG? And do you actively look for sort of at least a level of thinking around ESG in the companies you invest in?
Clearly, ESG has, raised its head far more in the past few years. You cannot avoid talking about it. I think what the industry is doing, and in particular being publicly listed, you have to have transparency. Where fintech intersects ESG is open to question, for sure. I think in practical ways, for us, we have to be aware of it. I think on the G, which is often in the current environment, everyone's focusing on the E. I think it's critically important, both in venture, financial services and fintech, to really focus on that. And that's diversity by gender, diversity by race. That's an area where we as an industry are doing far more, but need to continue to do more over the coming 12 to 15 years, where I think they say that's when we will see parity. It's taking longer than it should, but people can no longer pay lip service. It's actions. And I think transparency is a good thing, where people can't hide behind perhaps private cloaks that they did before, and you're being called out across every dimension. I think, of course, with any emerging theme, you see a lot of the same thing. So the number of environmental monitoring platforms out there that can truly measure whether it's your carbon footprint or something similar. There's a lot of Me Too out there, and it's really understanding what the differentiation is in the market. You're seeing a lot of these indexes appear. 100 of them can't survive.
Yeah.
You'll have a handful.
Oh, yeah, on pension funds and everything. And it's very hard. I think it's also one of those unique things where we really have to work together as an industry, be very collaborative, and before we think we have the solution.
Yeah, well, actually, you're triggering me, Tim, on the diversity. So what's your experience with management teams you invest in? I mean, if it's diverse, is it different? Is it better? Is it more easy to handle? What's your experience?
I think part of the challenge for us with diversity has been finding, in particular, female fintech founders. There is a dearth of them in Europe. And what we're starting to see now is a huge amount of talent in the senior levels amongst both fintechs and venture capital funds, that we think, that next generation, when they exit either that fund or that business, they'll be the next generation of entrepreneurs. So I think we're very kind of proactive in, trying to identify and find, more diverse founders to meet and engage with. But the reality is there isn't enough in the market, and we all need to do more to stimulate that. But I'm pretty optimistic about what we're seeing in the market, despite the fact, rightly so, that people say we could do a lot more. But ultimately, I think I see it around our table in terms of our investment committee. Diversity of thinking comes from diversity of background, by age, by race, by gender, and I think we have a much more stimulated conversation when we have that diversity around the table.
Yeah, it's quite funny. I'm just bridging because, Tim, I climb on every stage where I can preach this sermon, and much more so do so in practice. And I agree with you. It's not just about women, but it's also about giving young people a voice.
Yeah.
Because if you go to events or whatever, we always love to talk to them, but you hardly ever see them on stage. So
I think that's right.
Prince Constantine said, I'm never going to be on a manel anymore with only men. I say to people, I'm not going to be on an event if there's not a single speaker who comes from the next generation, because we sometimes have to listen to them and not speak to them. But anyway,
that's a good bridge maybe to where I want to go with you, Tim, because Money 2020 is coming in Amsterdam in June again. So no doubt you will be there. So what are you most looking forward to by going to Money 2020? What do you look for?
I think for me, there are very few conferences that I would go to in a year, maybe 2 or 3. Money 2020 would certainly be one of them, where I would look to attend. I think, having not been for the last few years during COVID, for me, the opportunity to meet a large number of both key investors and founders in a compressed period of time is extraordinarily valuable. I'd love to say I go there and listen to the content.
Don't lie here, Tim. Don't lie in the podcast.
I'd love to. One year I will. But I would do probably 50 or 60 meetings in those 3 days, 15 to 20-minute meetings, and that saves me weeks. And that's the practicality of it. And if you have the right people in the room, then you can shortcut a lot of conversations, and it stimulates ideas, it stimulates deal flow, and it's allowing you to reconnect, which after 2 years we all need to do.
Yeah, totally agree.
It gives us a lot of positive energy.
I think so too.
Absolutely.
Well, this is now we come to the end of the podcast, Tim, and obviously we would like to thank you very much. And I hope we will see you at Money 2020 in June.
Thank you, Brian. Thank you, Connie. It was a pleasure being with you this morning.
For people wanting to lecture themselves and others on anything fintech and smart VCs, I suggest you follow Tim closely, as he and his team continue to fund and attract more fintech ventures on Twitter, LinkedIn, and at Augmentum.vc.
Curious which music weekend favorites Tim brought with him? Check out www.fintechcappuccino.com/Tim Levene. Tim, thank you for joining us here at the virtual kitchen table in the Fintech Cappuccino podcast. And thank you for listening to Fintech Cappuccino. Don't want to miss another cup? Subscribe to our podcast via Spotify, iTunes, or where you like to listen to your podcasts. And please do give us a like or a review so many more Fintech Cappuccino lovers can find us.
So please join us again on Saturday morning at 9. We'll have the coffee ready just the way you like it.
Enjoy the weekend, Tim and all.
All right, thanks.